Hello and welcome to the Bulletin with UBS on Monocle Radio. Each week, the sharpest minds and freshest thinkers in finance take you beyond the numbers and hype, right to the heart of the big issues of the day. This week, in the first programme of the new year, yes, it's 2025, a belated Happy New Year to you, we have another special edition of the programme. This time we're bringing you a selection of interviews that the Monocle team conducted this past November on the margins of the UBS Australasia Conference in Sydney. At the event, UBS gathered industry leaders, policymakers and innovators to explore how topics such as productivity, healthcare and technology may affect the economy and investment landscape into the future. On today's programme, you'll hear from just a small selection of the UBS friends, old and new, that Monocle's team had the good fortune to sit down with for a chat on some of those themes during the event. We start with a regular guest on this show who popped up in Sydney to chat about the macro picture. Paul Donovan, chief economist in UBS Global Wealth Management, joined Monocle's Asia editor James Chambers in Sydney. James began by asking Paul to set the scene and introduce the Australasia Conference.
For us, Australia has always been a key business. The UBS Investment Bank has been here for a very long time, has been a major bank in the Australasian region, and the wealth management business with the acquisition of Credit Suisse is also a substantial focus for us here. And so this conference is bringing together clients and companies from across the Australasian market and beyond in the wider Asian region, and essentially showcasing the research abilities that UBS has got alongside the expertise of the individual corporates, helping investors make better decisions at the end of the day.
For those of our listeners who don't follow the Australian economy quite so closely, and we all know that it's the lucky country. It's had these decades of growth without any recession. But can you bring us up to speed where things stand now? What is the economy in Australia like at the moment, and what do the next 12 months look like?
So Australia is in a relatively good place, I think. The economy has reasonable levels of domestic demand. As with many countries, inflation in the aftermath of the pandemic has been a problem. The central bank, the Reserve Bank of Australia, recently kept rates unchanged because there is, I think, still some lingering concern about balance in the Australian economy, supply-demand balances and so on and so forth. Australia has also obviously been a major exporter of commodities over time. And has a particular relationship with China's economy, which is one of its major customers. So some of the slowdown that we've been seeing in China and some of the policy responses to that are things which are going to matter a great deal to the Australian economy over time. That's going to be an area of focus. One of the things that we've been seeing globally has been a sort of a bit of a shift away from spending on goods towards spending on having fun. And I'm often asked, what does an economist mean by having fun? And the answer is, well, it's anything you can Instagram. So that's leisure travel and tourism, amongst other things. And Australia does have a role as a travel destination. It's something which has done very well for Australia in the past. So the leisure and tourism industry here is something I think also to keep an eye on as a support for the economy. Even if we see perhaps a little bit more fluctuation on the commodity demand side, the leisure having fun aspect is there as a backstop.
Paul Donovan. Well, next up, James Chambers tracked down UBS analyst Richard Schellbach to ask about key issues impacting Australia and how the country differs from Europe and Asia. James began by asking Richard whether the average Australian feels they still live in a lucky country.
Not to the same extent as may have been the situation in the past. And what is certainly sort of mapped out through developed economies is a situation where, because of inflation and asset price appreciation, certain people are more wealthy than ever. And that's largely because of the move up in home prices and also equity markets to a lesser extent. But the wage earner has somewhat been left behind because the income gains that they're getting in their wages have not been able to keep pace with asset price appreciation, be it with home prices and also with standard sort of consumer goods. So basically, people may be told that they're wealthier than they've ever been, but they go to the grocery store and are paying 20 or 30% more for that basket of goods than they were 4 years ago. And therefore they feel like they've gone backwards. And to a certain extent, that creates some frustration and disillusionment, and leads to, electoral sort of outcomes that we're increasingly seeing.
We had the big election in the US, but we have a big election in Australia next year. We're still a long way away, but what are the types of issues that you think are going to be on voters' minds?
Look, I think the types of issues that will play out over the next 6 months as we head into the Australian federal election are much the same as what was seen in the US election. That is, the consumer out there is frustrated with inflation and the cost of living challenges that they've seen. They don't feel like they're getting wealthier, they feel like they're getting poorer. So economic matters, cost of living, absolutely, that will be key.
Australia, at least from outside of these shores, has always been perceived as somewhere that's very tough on immigration. I mean, immigration's become a huge issue in places like the UK and the US. Will it be a big talking point here in the election next year?
Look, it will be a talking point, but I'm not sure if it will be the talking point to the extent that it was, in the US election or in various sort of European elections. The Australian public is pro-migration because this has always been an economy that is built off migrants. That's nothing new. The somewhat pushback that the voter may have against the pace of migration is not about necessarily migration and multiculturalism. It is about the fact that possibly the migration program has allowed population growth to run at a pace in excess of where the infrastructure and housing construction has been.
One of the big issues in many countries in Asia Pacific is the transfer of wealth. Founders are, some in their 80s and 90s, are starting to kind of pass away, and the companies are being handed over to the next generations. How much is that a big thing? We've all been watching Succession and I've heard that it's loosely based on Mr. Murdoch, but more broadly, how much is that a big topic down here?
The real story in Australia in terms of generation wealth transfer is within the housing market. And that isn't necessarily millionaires or billionaires, but it's what would have been considered middle-class Australians who, because of 30 years of house price appreciation, are now maybe in their 70s and 80s living in a 4-bedroom house that's worth $3 or $4 million. They don't need a house that big. They obviously don't need much income day to day anymore because they don't have a mortgage. And as those people move on, that asset will be transferred to another generation. Now, it's creating a society of haves and have-nots, because obviously if you are on that inheritance path, your sort of financial future and security is in a totally different situation to the ones that don't receive that. So it's a challenge for governments to navigate that, and it's something that obviously governments are aware of, because it's a story that 10 years ago was something that maybe actuaries or statisticians talked about, but now it's front and centre, and it's something that will be influential in sort of deciding the outcome of elections.
Coming from a European perspective, where we've long ago kind of given up on having a state pension and looking forward to a golden retirement, why is Australia so well funded?
It was a system that was set up over 30 years ago with a lot of vision, and they were brave in terms of making the moves. Something that Australia did that was quite counter to European systems at the time was, firstly, commit to a defined contribution system. So defined contribution systems were deemed as being far more better aligned in terms of the worker, the company paying the pension payments, and governments over a long term. The second thing that really made the Australian superannuation system successful is it's always had a very long-sighted asset allocation structure that acknowledged that, yes, asset markets go up and down from year to year, but over the medium to long term, to generate a return, you've got to take risk. And to take risk, that means you've got to be in risk assets, i.e. listed equity markets. So the Australian superannuation system still maintains over 50% of its holdings in listed equity markets, and that's really counter to some of the pension systems in Europe, where the allocation towards listed equities is below 20%, and they've had a far higher preference for those fixed income payments. So the capital markets here are far more supported in terms of equity capital versus what you've seen in Europe, and also the ultimate returns that the fund holders have in our pension system has been far stronger because it's been so allocated towards risk assets, in other words, equities.
And finally, as we move towards the end of the year and look ahead at 2025, how do you feel about next year? And is there anything in particular you're looking forward to?
Look, we're cautiously optimistic on the next year. We think that companies will grow profits as the rate cutting cycle comes through in the middle of next year when the RBA is in motion in terms of its rate cutting profile. The economy is on a good footing here. Where we are somewhat concerned are just the valuations on equities. They, to a large extent, have already priced in a lot of that optimism. And what it means is that earnings growth really needs to come through. And for the best companies, they are able to generate earnings growth because they're gaining market share off their competitors, they're able to manage costs and support their profit margins. But for many companies out there that maybe aren't the strongest operator in their business line, they are still being challenged by the sort of high interest rate environment, the sticky cost environment, and just the overall sort of competitive landscape. So for the best companies, I think they will continue to thrive. But if you're not at the top of your game, the cost challenges will continue to be a headwind.
Richard Schellbach in conversation with James Chambers. Now, balancing the potential risks and rewards of artificial intelligence was certainly another key theme in Sydney. This mix of hype and fear surrounding AI, both for consumers and for investors who are trying to figure out exactly where it best fits into their business, can make it some tricky ground to navigate. Renee Lo, Singapore-based regional director at Google, spoke to James in Sydney about that landscape.
I think when you look at the different technologies that have come out over the last years, there's only a couple that have come into prominence so quickly. The internet, for one, mobile, for one, and now Gen AI. And so I think in my many years of working, this is probably one of the fastest paced growth and pickups in at least the last 5-10 years. Now, when that happens, sometimes the world is not ready for it, right? So I would say some of it definitely is hype, but a lot of it is also real. And in the last 12 months, a lot of that has shook out such that the hype has died down. And now we're really talking about what goes into production, what will actually stay, and what was a lot of noise, a lot of cost, and a lot of flash, but ultimately didn't have an impact for businesses.
Interesting that you used those three examples because obviously the internet and mobile phones have absolutely changed our lives, transformed our lives. So, I mean, are you suggesting that AI has that potential and how soon will we know?
Well, I think we're feeling it already. Recently, a Vodafone business report said that over 51% of organizations in APAC have adopted Gen AI in some way. But I think the interesting thing is when you look at those three technologies, none of them are destinations. They're all paths to some level of productivity, some level of usage. And so I think from the internet perspective, it links you to knowledge, right? From a mobile perspective, it links knowledge to you at any point of wherever you are geographically. And I think AI is going through that same evolution where it used to be a destination, like, hey, I'm gonna go to this AI tool and ask it some questions and get some answers. And that's more of treating AI as a destination. But I think ultimately for AI to live up to its hype, it needs to be integrated in every part of the business processes, into the lives of individuals. And so it's no longer a destination, but something that is just immersive through every aspect of our life.
Where's it going to touch us, the regular people, the consumers, in the next 12 months? Because there's a lot of AI being used behind the scenes at the back end, and we don't even know about it. We don't even need to know about it. But in terms of how we're going to see it and feel it, besides the tools you mentioned, which you could see as a kind of an iteration of the internet anyway, what's coming down in the pipeline?
Yeah, so I think you're correct in that there's a lot of AI in the background for at least the last 10 years, right? I've led AI teams at Microsoft, I've led AI teams at AWS. A lot of it is behind the scenes efficiency that just serves our customers better. I think you're gonna see a lot more agentic AI in front of individuals themselves, right? Take, for example, in Singapore, the government has quite a bit of investment in supporting Gen AI in the country. Now, half of that is digital infrastructure, but the other half is consumer upskilling, investing in its local businesses, and it really is getting that in front of individuals into the forefront. Just give you one example. Badminton is essentially a national sport in Singapore. And in the past, for us to schedule a badminton court, sometimes you have to go physically in person and fill in a book. Sometimes somewhere online, you got to keep on hitting refresh at midnight and hope to God you get that spot. And now they have rolled out a Gen AI agent where essentially you can now talk to the agent about your preferences, about your locations, your times of days, perhaps even your skill level or whatnot, and then go all the way through scheduling in the end. And so I think all of these are actually exposed to the end user very purposefully for helping them go on the journey of Gen AI. We see a lot of this from a customer experience perspective, whether it is the call centers that we hit. And I know once I say that, there's a lot of frustration that people feel where you're getting put on hold forever or going in endless loops and cycles. But at the end of the day, with Gen AI coming into that space, it can bring more empathy, it can bring more solution, it can bring more empowerment, both from a customer who's calling in and an agent perspective. And so I think we will interface more and more with Gen AI. What we will see, however, is the Gen AI you see today will be coupled with a human being, augmented by a human being, either the end consumer or the person using Gen AI to become more productive.
And finally, there are a lot of people telling us to be excited about AI, and there are a lot of people telling us to fear AI and run for the hills because the robots are going to kill us. What's your view? What's the Google view of AI?
From my view, I would say that we have to be very clear about the use case we are trying to solve, and we put the human back into the center of the use case itself. I think what I fear is sometimes when AI is just this broad-based thing, you can do anything under the sun, and then it just runs wild. We've seen some of this over the last year. And so I think when I talk to organizations, it's really around, let's talk about the challenge that we're trying to solve, right? And let's get to how does that benefit the employees? How does that benefit your customers? How does that benefit the organization? And even more importantly so is how do you do that in a sustainable way? Right? Have you actually built out a responsible AI framework? Do you have an ethics committee? Do you have all of those different pieces? Because what I fear is AI is just a tool, right? And you can use it one way or the other. Now, if you don't use it at all, others are using it anyway, right? So then we're just kind of falling behind. But we just have to be very thoughtful in terms of how we're using this tool. And when there's any doubt, to just pause, get it with ethics committee, and make sure that we feel that from a responsibility perspective, from a fairness and bias perspective, from an explainability perspective, those fundamental pieces are there. And so that's actually why when we have conversations, sometimes folks are saying, hey, Renee, you're talking about fairly common use cases. They sound like low-hanging fruit or whatnot. Let's go do that crazy thing. And I was like, okay, first of all, these pieces have been very vetted. I can get you the ROI quickly within 6 months. Those other pieces, yes, it's super interesting, very innovative, but we have to talk about what are the implications of doing so. What precisely are you trying to solve, and what are the risks around it? So I totally agree. There are risks in AI, and it's really important that a company not choose to completely not participate, but rather start building for the responsible AI framework, the ethics community, the top-down leadership in terms of how AI is a strategic part of their business and how they expect it to fit in.
Google's Renee Lo. Well, finally, let's hear from Lachlan Shaw, who's co-head of UBS Mining Research. He spoke to James Chambers about the recent and often mineral-powered growth of Australia's economy and the role of exports to China in that, and what the next chapter of the story might look like.
Yeah, it's a really good question. So I spent last week in China, moving around with a dozen investors. And I guess, when you sort of sit back and pose the question you've posed, what strikes me, certainly in my time, China has pulled off an extraordinary feat. 450 million people have been lifted out of poverty and now have a living standard which is good. And Australia has played a key part in that. As you note, exports of iron ore, coal, LNG, have all played a huge part in China building out all those cities and bringing people from poorer rural areas into more developed urban areas and improving living standards. And so that's been an amazing period for us. Australia has benefited immensely from that development. Where we stand today, China is, really in a way, it's X that sort of really strong growth phase. The urbanisation dynamic is still there, but it's slowed. And you're now talking about an economy that has moved into a relatively developed status. We go to Shanghai, Beijing, and we struggle to see construction cranes these days. So what's next? You sort of have to pan out more broadly and look at the region. We look at Southeast Asia, we look at Indonesia, 230 million people. We look at India, 1.4 billion people. A lot of these countries in these regions are embarking on a similar path to China. They won't be the same path as China has taken because different governance systems, different economies, different structures of growth, etc. But in broad terms, there's a lot of people in the region to Australia's north and west that will also follow a pathway of development, modernisation, urbanisation like China has followed. And those markets will need commodities to build out those cities and those urban areas as well. So when we look at it and sort of sit back and have that helicopter view you described, the sort of the 2-decade forward, I'm still quite confident that there's a key role for suppliers of commodities into these growth stories, these growth thematics. Australia will play its part there, not without its challenges, but there's certainly a part for us to play going forward. Perhaps not quite the part that we've played in the past, but certainly a key part going forward as well.
When it comes to these export countries, the countries that are sending commodities around the world, who's Australia's closest competitor? Are you competing more with yourself, or is there another country that's actually, nipping at your heels?
It's a good question, and it varies by commodity. So we take iron ore, which is Australia's largest commodity export. It's really Australia versus Brazil, a little bit from India and South Africa, and that's kind of it. China has its own iron ore mining sector, but Australia is 60-65% of the seaborne trade. And so in a way, to your point, we're almost in a way we are competing against ourselves. And so you get into issues around costs and competitiveness, labour, all this sort of thing, permitting, and that's something the industry manages. Other commodities, it varies. So lithium is probably another good example. Lithium's a great example. Australia, Western Australia has a lot of lithium. There are a number of mine projects there, but at the same time, we're now seeing, rapid development of lithium in China. And the Chinese are just fantastic at developing these assets in a capital efficient and an operating cost efficient manner. We're also seeing Chinese companies develop lithium supply in Africa, in Zimbabwe, in Namibia. These are jurisdictions that at the outset, 2-3 years ago, we would not have expected to see this supply come into the market. And so that's creating uncertainty and a real sort of dynamic arm wrestle, if you like, in terms of who is where on the cost curve. Copper is quite fragmented. Copper's universally loved and people are very bullish because of electrification, because of decarbonisation, but it's quite a fragmented supply chain. Australia has good endowments of copper, but nothing like what we see in Chile, for example. So what we see is across the different commodities, industrial base metals, bulks and energy, we see different market structures. If I can bring it back to Australia though, we focus on iron ore, coal, met coal particularly, and LNG. These sort of 2 or 3 key commodities tend to be more concentrated. And so what we tend to see is superior returns for investors who are investing in the producers.
Lachlan Shaw. And that brings us to the end of this special edition of the Bulletin with UBS, setting the agenda in the fast-moving world of finance each week here on Monocle Radio. You can listen again and explore more at monocle.com. That's where you can join the club and subscribe to Monocle magazine. You can always follow this programme wherever you get your podcasts. If you want to discover more and find out how UBS can help you, head over to ubs.com. This is the Bulletin with UBS on Monocle Radio. I'm Tom Edwards. Thanks for listening.